6, 3, 2, 1.
Welcome back. I hope you're loving the conversation. I know you've been chilling for this episode, so we are we've entered such an interesting part of the life journey. But if you're catching us here, go back and hear the story from the beginning, because the dots connect. You get to you have more context and understanding of where we're at because of the history of the story. So, Mary, what I wanted to find out from you just before, from the last episode, was the history of this phenomenon called Equity Bank. But let's start it from teach us, educate us.
Okay, thank you, Richard. Equity has an interesting history, and how it came up was, in a way, it's tied to the history of the banking industry in Kenya.
Oh.
Because what happened is that traditionally we had the mainstream commercial banks, and the business model was such that for you to open an account, you needed to pay what we call an account opening balance. Typically that would have been like 10,000, 15,000, 20,000. That was the typical ask from the bank for you to open. And then the banks would also charge ledger fee monthly. And then you had to maintain a certain amount in the account for it to remain operational. We're also looking at a time when there were some restrictions on withdrawals. Like when I was at the university, I like telling this story. I used to bank with Post Bank. And the Post Bank was basically the bank for students. And the rule was, if you withdraw today, the next time you can withdraw is 7 days away. You can't believe this used to happen in somebody's lifetime. So there were those restrictions. You open, you do. So one time I had my brother's pre-wedding. And I had a duty because of the organization and all. So I went to Post Bank on a Saturday, like today, and I withdrew the money I had in there, or I needed. And then I entered a bus, number 7, to go to Pan-African Hotel to check on the cooking, because the cooking was being done there. My cousin was working there at that time. Now, I'm not sure what happened in the bus, but by the time I got to Pan-African,
There's nothing.
I had no coin on me.
Welcome to Nairobi.
I tell you. So I'm thinking, my brother's pre-wedding is tonight. I have no coin on me. So I decided to go back to Post Bank. And I went to the inquiry desk and told the guy there, excuse me, can you help me? I was here just some minutes ago, but I've lost the money I withdrew. Can you allow me, because I still have some money in the account, to withdraw a little bit more? So the guy looked up and pointed to a notice on the wall. Withdrawals will only be allowed after 7 days. Can you read?
And this is your money.
And it's my money, So those were the peculiar issues. So what then transpired was that those conditionalities that banks had placed on customers were not in tandem with the reality of the customers.
Okay.
Because if, for instance, you have a business or you are a low-cadre staff, so you're on a salary, if the bank tells you to keep or to bring 10,000 at a go for you to open an account, what does that mean? I cannot afford it because maybe my salary is 10,000. This is the salary, I'll pay my rent, I'll buy my food for my family, and all those other requirements. So if you tell me to give you 10,000, where will I get it from? Or if I'm a trader who deals with, anything, and you can talk about a vegetable vendor or a bitumba vendor or something. What is the take home per day? They are probably making 1,000. And this 1,000 is what will buy unga for the family and all those things. So if you tell them, give me 10,000 to open an account, even if they wanted to, they will never be able to get that kind of money to give you to open for them. So what did that mean? It meant that in the 90s, we only had 5% of the bankable population banked.
Of the bankable population.
And bankable here means that I'm earning an income of some sort, either through employment or through a small trade or other business. 95% did not have, actually it was 96%, did not have bank accounts because the conditions were too tough for them. What then that meant
So
is
how are they
that
getting their salaries?
they would, some of them would get their salaries in cash. But remember, some of them, the traders, it's a cash trade. So they just make some money. And that is where now we say that, where do they bank? And they bank under the mattress.
Under the mattress, yes.
And mattress here might mean physically the mattress,
Yes.
or a tin, or another place. But they don't take it to the bank. That was the reality.
They kept their money with them. Within
Exactly, yes. That was the reality. So 96% were bankable but not banked. Now, Equity was started in a village in central Kenya. And that was just because the farmers would get some produce money from, the cooperatives and all that. And they would get paid by checks. But then they don't have bank accounts. So they used to, the founder chairman of Equity is from that region. And
What's his name?
Mr. Peter Munga. And so they would take for him the checks because he used to work with the government that time. So the farmers figured out, or because this guy works with the government, he knows how to convert these checks into cash. So they'll bring all the checks to him and tell him, okay, we don't care what you do, just give us the cash. And then he decided, I don't think I want to do this for too long. It's too cumbersome. So that is where the idea of starting a bank that really understands the needs of these people came.
Wow.
And that is how Equity was founded. But because they would not have the 250 million to get a bank license, they opted to do a building society. That is why it was a building society.
Wow.
So it will still be able to do savings and loans. So after 10 years, the business model did not sort of do well because they were not able to grow the business. They were not able to create a strong brand because, also for banking, you really need to have a strong brand that people can trust. So it was technically insolvent in 10 years. It was started in 1984. By about 1993, it was technically insolvent.
Did it have non-performing loans?
54%.
That's
More
high.
than half of the loans
That's
were
very high.
non-performing. The liquidity was way below the requirement by central bank of 20%. It was at 5%. It was making losses. Shareholders' funds were totally eroded.
Wow.
So it was not doing well.
It was on the deathbed.
It was on the deathbed.
Yeah.
Actually, the central bank wanted to close it, but they were given one more chance to reopen on condition that they made some changes. So at this point, the business model was changed. And they said, how can we target this 96%, which is not banked? And that is when the microfinance model was put into place.
Just hold on. Let me just ask this question. The whole of the people who had banks account was just 4% of the bankable population.
Yes, that was
While
the reality.
all these other banks,
Yes.
they just had 4% of the market.
Yes, because also the banks, for you to open an account, they will typically ask you to be introduced by an existing bank account holder.
Wow.
Now, if you only have 4% of the population banked, how likely are you to know a person who has a bank account in that particular bank?
Wow.
So banking was actually very elitist. It was for either the top corporates or a very few top employees.
And therefore, we're also saying
Yes.
banks, the physical location of banks, was not in every county.
No, they were not accessible, even the infrastructure. And that is why you can see one of the things that we did as Equity was to quickly grow the branch network so that we are accessible throughout the country. We have about 200 branches in the country right now.
Okay.
So that you are close to the people.
Okay.
So
let's go back to now that where you had left off.
Yeah, so that was the challenge. And the challenge for Equity was, and the opportunity, let me call it the opportunity, was to figure out how to reconfigure the business model to become more relevant to this 96% who are banking with the mattress. And you know, we talked about the barriers. It's account opening balance, account maintenance balance, ledger fee, recommendations, even a photo, the requirement that come with a passport photo. It was a big issue.
Wow.
Because,
It's not digital at this time.
No, you had to actually bring a photo.
Yes.
To open an account. Now, can you picture yourself? Your home is in one of that, in Tetu. No, Tetu, by the way, is okay because I can walk to the town, to Nyeri town.
Yes, okay.
So we are not too rural.
Okay.
But you can imagine if you had to travel like 50 kilometers, like some of the customers have to get to the town.
Wow.
And then you come to the town, go to the studio, take a photo. That time it was not like these ones you're doing here.
You had to do something called develop it.
Washing. In Kikuyu, we used to call it
Wash it.
in Aosho. So it wasn't easy. So you go take the photo and then you are told come after 2 weeks or 3 weeks to check whether it's ready. Now, when you get the photo, then that's when now you go to the bank and then it takes another few days. So you'll make about 3 or 4 trips to just get the documentation right. So Equity said, you don't need to come with a photo. So there was a white wall. Take a photo and it's uploaded onto the system.
Can I ask this question? Why wasn't the banks that had the 4%, why didn't they consider this 96% a target audience?
I can't answer on their behalf, but there are 2 scenarios. And the first one is they did not really understand the market.
Okay.
And the needs of the market. And they probably did not also understand how the people did their business. Because, you know, for you to innovate, you must first of all understand what the gap is and how the people operate.
Okay.
So and that is where Equity came in and said, we are understanding that if I earn a salary of 5,000, I am not possibly able to give you a balance of 10,000. So Equity said, hata kama ni shilingi moja, even if you have only 1 shilling to bank, bring it. Come with your documents, we'll take a photo of you and open an account for you. You don't need to put a minimum, just bring the money as it comes. You
made it extremely simple for them to open up accounts.
Easy.
You removed the minimum balance. What about ledger fees?
The ledger fee was scrapped. No ledger fee. No account opening balance. No minimum balance. No ledger fee. Compete with the mattress. Because now, remember, your competition... Your competition, yes, your competition is a mattress, not another bank.
Mary, I'm going to take this one so slowly because I don't want us to think this is norm. You are saying, was there these banks used to make so much money on ledger fees. Banks could take your minimum deposit that you're not allowed to withdraw and go and make more money on it. So you guys were completely changing the model on how banks make money.
Yeah, but it's because we understood what the barriers were. Why aren't 96% of the people able to open an account? And then you understand it's because they keep their money under the mattress. And then you understand what is the competitiveness of the mattress. The mattress does not ask a ledger fee from you. It does not ask for a minimum. Hata ukiweka 100 ni sawa.
Utatoa 100.
Utatoa 100. So you understand who your competitor is.
Okay, I get that.
And at that point, the competitor for equity was the mattress.
Wow.
So once we understood those barriers and the competitiveness of the mattress, it was very easy to configure the business model accordingly.
Okay.
And we told the customers, just come with your documents. We'll take the photo, deposit whatever you have. Take out your money whatever time you want. Even if you come in the morning and you want your money in the afternoon, it's okay, so long as the money is in the account. It's your money. Manage it the way you want. Why should I tell you to come after 7 days? And yet I'm not the one who is making this money. I'm not sure what you do to make this money. Come for it if you have to come 10 times a day, so long as your balance can support that. That's how the business of equity grew.
Okay, let me ask this question. I was in Zambia the other day and I was shocked when hearing that banks close at midday sometimes. Did you have operating hours that were different from the culture here?
Yes, equity started longer banking hours. So whereas other banks were closing at 1, equity started, I think initially it was 3 p.m. and then 4 p.m. I think now is 4:30. So the hours were changed earlier and later. And that was also a serious attraction to the customers because it gives them more flexibility. Especially those who are working in offices and they have limited time.
Okay.
So those kind of innovations are the ones that really attracted the market.
How was equity? Because this is so radical, let me just be honest. And you have to move your mindset to that time to understand that the radicalness of what equity was doing. What then was going to be the business model in which equity was going to make ROI? How are they going to make money?
It was very simple. It was because now you have collapsed all the barriers
Volumes
to entry. It's high volumes, low margins. High volumes, low margins. And we said we would rather have 1 million customers who each give us 10,000 than one customer who gives us 1 million.
Yani.
But even that one who gives us 1 million is welcome.
And you have them.
We are not, so we said it's an inclusive model. And we have everyone from the very top to the very entry level.
Yeah.
So you open it up and you have products and delivery channels for each and every category. So whether you are a top executive, there's a product for you and there's a delivery channel for you. We have the supreme branches where that category of customers is accommodated.
Yep.
But we also have products for those who are just entering small balances, because our aim is to facilitate you to grow within your means.
And imagine.
So we broke down all those barriers, and that explains why equity grew the way it did.
I'm thinking about you getting somebody straight out of high school, working with that person as they begin earning their first salary, all the way until that person becomes a millionaire. He's with you. Yeah,
because now you follow the lifestyle. So, and actually now it's not even from university, because we are also paying school fees.
Wings to Fly?
Yeah, we have the scholarships, but even for those parents who pay school fees, we have products for them. So we are paying school fees. Some of the people who are our clients remember equity because they used to go to equity with their parent to process the school fees payment. So they became used to the brand and they used to aspire. And then now they go to university, you have products for the university students, and then they leave university and then it's a first job. You have products for them, you have cards, for them. Then after that, probably you are looking at, I'm now starting my young family. And now you have insurance for the family. You have a mortgage when they want to buy a car or a house. So you follow the lifestyle.
I get it.
Of the customer. So we always say now it is cradle to the grave. To the grave, yeah.
That's what it is.
Yes. And you follow the customer through their lifestyle because the needs also change according to their circumstances. And that is how now the products are structured.
Okay.
Yeah.
By the time Dr. James Mwangi is coming to meet you for the first time, because this 1.6 million USD,
yeah, the
120 million
the
Kenya
investment,
shillings,
yes,
has come in. What have these investors seen in? They've seen that Equity's model is it wasn't a grant, it was them investing into the company.
It was them investing, and they were investing because they have understood the potential for very significant growth. But partly it was also because they want to support that move, to financial inclusion.
Yes.
So there was that double-edged
Bank the unbanked.
model. Banked the unbanked. So they want to support that.
Okay.
But they can also see huge potential for growth.
Yeah.
Because, you are looking at this highly fast-growing population, and you can figure out these guys will need banking.
Yes.
And financial services at some point. So it is the time for us now to prepare and, prepare the networks, set out the outlets, invest in technology, because we also did that at some point.
Yes.
Just after that investment, we invested in one of the top core banking systems that anyone had ever invested in Africa.
I know its name.
Finacle.
Yep. Yes.
By Infosys from India.
Yes.
So that investment was also made, and that was now to provide the platform to support the growth. Yeah.
So let me just say also, as somebody who's tech savvy, so much is happening at this crucial time called 2001, 2002. We're talking about the mobile money, which is a huge phenomenon, maybe coming in around that time, if I'm not wrong. But then we're also talking about 2002 and change of regime.
Yes.
You even clearly mentioned it in terms of the hope. So by the time now we can continue with the story, because you've beautifully explained this history. I have understood it, and I'm just like, wow. He was providing a solution, hence that birthed this building society. So by the time they're coming back to you and telling you, we need now your help, what does that mean now? Or let me just say, continue now from that.
Now to do the conversion.
Yes.
Because my bro is a guy of facts. So when he went and did his own research and realized, wait a minute, this guy is not a bad guy. It's not just that he's a bad guy. For the longest, he treated me like, you guys, this is just you being irresponsible, So anyway, I get kicked out. I go to LA with my 5K or something. Of course, in 2 days, that 5K is gone. You guys, let me tell you, nilikula njaa. Hunger.
Yeah.
Hunger and no way of making money.
But at least, let me say this, at least you had accommodation.
Yeah.
For that time. But go on.
I remember there was a day I got so hungry. I was given my bed and an old school TV to go with. All down with the Kisogo. I remember I used to have to smack it, and a DVD player. Because the color would start disappearing, I have to smack it. I remember thinking, you were in SA, look at you now, look at you now.
Wow.
I remember trying to cook omena, because I think I had some little money left. And I had a small stove, tried to cook omena. I didn't know how to cook omena, so the whole house is just smelling of fish. But I've not eaten. It was so bad, And then, of course, money ran out. I remember the day I was so hungry. This is like day 4 of not eating, I just went to a neighbor and asked for an orange. Like, I don't know why it was an orange in my mind. I think the succulents. And it was a house help once. I remember, like, I think I said machungwa, machungwa. Like, and I remember biting to this thing, and it was like, it was like I was drinking from heaven. So periodically, my eldest bro would come visit. And of course, he's just saying, you guys, now you're konda njaa. there's only so many 500s you can con, guys. At some point, you don't even have texts on your phone.
Yeah. But if you can't afford food, you also can't afford drinks.
I'd find it. That's the first time I ever drank changa.
Huh?
Yeah. Changa bana.
Now it gets lower. Eh?
And Langata, let me tell you. In fact, recently they've kind of renovated that area near where 1824 is. Those two choms there. Chom is like a kiosk-looking kind of thing that is actually like a cover for like where they sell most of this illicit brew, either counterfeit quarters,
yes,
counterfeit renditions of cheap liquor. Can you imagine that? Counterfeit
of cheap liquor.
Counterfeit renditions of cheap liquor. And you could always tell, if you're an alcoholic, you can always tell either the label is skew or the smell, or it opens too easily. Yeah? And there are times you'd still drink knowing this thing is fake. Ini imbo. Yeah. Then I start hearing about, there's also cheaper than this.
What?
There's also cheaper than this. So now, guys, I was introduced to a place where they sell charm. Now, Langata, remember, is where I grew up, Kitambo.
Yes.
So every so often, I'll bump into like a childhood guy. And of course, now these guys are seeing me. They're like, there's something here that's not right. So word has gone to like my bro. Hey, guys, saw your bro in LA. Hey, guys, saw your bros. You were. Now, I remember one of my lowest moments was, so this Changa lady was in an unfinished abandoned house. Like a structure of concrete, stairs without a banister. Like someone either ran out of chums in that construction, so she just sells up there. You'd be surprised. Taxi drivers, there's many alcoholics in normal society, let me tell you. Shopkeepers, petrol station attendants, guys taking a break to go pick a shot of charm. And working, again, a taxi driver, I don't think there was Uber there, I think it was those normal cabs. I saw guys, like functioning members of society, so.
Do you have friends? Do you have anyone who you talk to now?
There's this one friend of mine called Ricky from high school. My very good friend till today. All through periodically, he's been up and apale. Even when I was now kicked out, he came and visited me, and I remember he brought me food. I remember how sorry he looked when he saw how I was living. He's like, you guy, man. Like, hey. I know at that time I didn't see how bad it was. You don't see. Yeah. So, yeah, that Changa, and Changa has a cheap high. It's not the same high as normal liquor. Like, yes, you get a buzz, but it's a cheap buzz. I don't know how to explain. It's like, maybe like bad food is I'm trying to think of something that you're high, but you're like, easy, like, now you just have a bad breath. So,
and you are not working, you're not going to school.
Just finessing on the phone. So I said, like, there's only so many 500s you'll get until you've literally run through everyone. Yeah, and you asked.
So you'd wake up in the morning, you go through your phone book to see who you can get money for, so that you can go and drink.
And the only reason you're not selling your phone because it's your last frontier. Because if you sell your phone, now you're doomed.
Guy.
Now you're properly doomed. Because now you're how? That potential 50.
It's the only way you can get for access.
It's the last way you can get access.
So credit you buy. You don't even buy food, you buy credit.
I think, that's what I was saying all the time, I think I even ran out of texts. Like, I didn't have airtime. Airtime, how do you spend money? How do you spend 50 on airtime? How? You're eating into your drink money, man.
Yeah.
I had Denny's at
kiosks.
Kibandas. We're talking food for 60 shillings. I once had a lady tell me, she bought me food because she was like, you guy, you scrambled whatever you have to drink a quarter, you look like you've not eaten for days. And then within that underworld, bado kuna watu, there are guys like you, there are guys like me. Like you hear their stories, not that you're a guy from the ghetto.
Oh.
There are guys also who've been ostracized.
So there are guys who are talking proper English, ubabi.
There's a whole, let me tell you, in this Nairobi, there's a whole underworld of addicts just existing. And you'll find them if you're an addict. You'll find yourself
there
in those realms if you're an addict. So anyway, let me
No, I get what you've said, but that's powerful. You can assume that the guys who are there are quote unquote lesser than. but they're not. It's just addicts who've depreciated in the ladder of life.
Juicy, a guy, 2 stories. A guy at my current workplace, an operations guy, died, addiction related. And guys were making, not light, but they were like, in my mind, I was thinking that was just me. Like, that guy was probably trying everything he could to fight the fight and just lost. And at some point, you don't even have the energy to fight anymore. And if you're a softie like me, suicide is not an option. Like, guy, bro, that's too painful. But
No, but I understand what you're saying.
yeah, like, I know, you guys, what if it backfires? So, eventually, I think I stayed out from, when I was kicked out and I moved to Langata, I stayed.
What's the other story? You said you had 2 stories.
My former employer hung himself. Former colleague where I used to work before hung himself. And I know for a fact it's addiction related because he was struggling. I remember talking to him about it and trying to give him hope. And eventually, I hear he got fired because of some disciplinary issues. So when I was called and he hung himself, I don't know why men choose such a hard path. What was I saying?
Wow.
I saw how troubled that guy was because he'd come to school heffing. Because I used to teach, I was an instructor before this job. And I used to try and just tell him, you have a problem. But you could tell him from his, it was a point of he's never had the information properly to understand he even has a problem. So he's not even willing to begin the conversation.
I have a problem.
Of admitting, because it's never been packaged in a way that he'd even begin to understand. Him is just suffering and struggling through life. And how many guys are there like that? Yeah.
Bro, just what you said there is so, I'm so glad you said it, and I don't want to jump over it quickly. You're dropping so much value on wisdom and nuggets that it can be easy to skip over it. You're seeing this guy, and you are seeing, you just have a problem and you can get over this problem. Him, he's not, it's the information, I love the words you used. The information has not even ever been packaged to him to communicate to him in his language that he has a problem for even him to see hope for a solution in terms of looking at you.
He's going through the version of what I went through now in high school before I understood what was going on. It's like now someone at that point in high school telling me, you guy, I think you're, at that time, you're like, hey, what do you mean? What are you talking about? Yeah.
Because alcoholism starts at different ages.
Yes. It's progressive.
And different triggers. So somebody can get divorced and that starts it. Somebody can lose a child and that starts it. Even life things can. You guys, what you've just said there is a lot. Wow.
And it's progressive. I keep telling guys, it's progressive. Like, me, I'm here because I started very young. Most guys start after they've finished campo, so it manifests in divorce, loss of job. By the time they're mid-40s, Apple, that's when it's lipukad, Denny's, they've ruined their marriage. Because they started, they were good people. They did their uni, then they went to work, they earned a bit of money, they're like,
When got married.
They're married, and then now they introduced, by the way, us guys with salaries, we go out on Friday and we have beers. And then now they develop their culture. 15 years later, they're 40-something and they're alcoholic. And now it's lipukaing then.
Yeah. Eric, thank you. Thank you, man. God bless you. What? Let's take a break. Wow. You guys.